is that their model? And I can't remember his answer, but I'm pretty sure it was, yes, that was their basic model. So they were confirming the basic process that they go through as well is the same as most of the banks' process. I'd be surprised otherwise. So what does that mean? Well, that means that, you know, as the price goes higher, the dealers sell, and as the price goes lower, the dealers sell. So when you think about what that means in terms of a shape to this storyline, if I just draw in the shape very, very roughly, the shape kind of sometimes will look a little bit like this. Now, what does that mean? That means that we've obviously got sticky gammas above, haven't we? So this would be a gamma, or if you want to call it a delta, it doesn't make much of a difference. So this is gamma, okay? And what this trade is showing is that this would be the price axis here, right? So this is as price goes higher, this would maybe be at the monies, for example, here. So this would be at the money at this point, right? So ATMs here. And you can obviously understand that during this process, as the price goes higher, the dealers maybe have to start selling because they've got a lot of positive gamma. They've got a lot of positive gamma. Now, the higher this line goes, the more selling there is. Now, that means that at the bottom edge, this is quite sticky, isn't it? So the gamma here for the dealers actually is quite sticky. Yes? Just according to my drawing, of course, the gamma is sticky here. Now, obviously, if that's the case, then you're not expecting a lot of downside in this. But obviously, volatility changes this storyline because as the price starts dropping, volatility starts rising. And because you start going through certain strikes, whilst this is what the gamma or the delta looks like, the volatility is always going to be a lot more. So the volatility might look a little bit like this in this type of situation. I'll draw it again instead of this. So just get the drawing tool. So the volatility might look a little bit like this. And that's what they call VANA, of course. It's the volatility of the dealers. Now that's still quite sticky, isn't it? That still has this concept of stickiness at the lower prices because obviously it's sticky at the high prices and there's not a lot of slippiness at the bottom because remember, at the bottom edge, the higher this goes, the more selling is going to come in. So this is not a lot of selling. But what happens over time? What happens if this goes the other way? What happens if we start seeing this changing around a little bit here? And by changing around, what I mean is, what happens if we start seeing a VANA that looks a little bit like this? Not Ivana, that's a different person. What if we start seeing that? What if we start seeing this? Well, obviously that becomes incredibly slippy, doesn't it? This is what slippy looks like because the volatility is building because of the sheer size, perhaps, of the deltas that are starting to come into the markets. The volatility becomes incredibly slippy as we start going through certain strikes to the downside. That's the dealer's VANA. That's the dealer's VANA. They are very, very, very now very heavily going to have to hedge if the dealer's VANA gets to that type of size. The dealer's VANA is getting to that type of size. And that's what the problem is trying to be a buyer today on equities is we have that dealer situation there on hedging, which is getting worse and worse and worse as we come into the end of the dealer rollover. And again, this is not hindsight information, is it? This is all stuff we said last night to anybody that was reading the tweets. If you were looking at the concept of some of this dealer hedging concept. I'll show you the tweet. We'll obviously have a quick chat about it, and you'll see that this is what we did say. The macro stays very bearish, the macro. So the macro of the market, I'm talking about things like the quality spreads, the specialists, the big GM fund rotations. So the macro is staying very bearish on those. Here is still in place, and with dealer exposure building, They're getting heavier and heavier short at higher and higher prices. And for that reason, it becomes more explosive on a downside, especially knowing that volatilities are very, very cheap to buy. And that's why people are buying them, which makes this downside very explosive. It makes it very dangerous. We are one bad news break away. Also, the volatility adjustment will add selling weight as we move into the weekend. Does this logic make sense, guys? Does this logic make sense? As you start to add size into this, this gets slippier and slippier and slippier. This rotation away from these areas starts to catch people out. As that goes up, it starts to catch people out on this downside. It becomes a more aggressive sell-off, doesn't it? So hopefully everybody kind of understands that. Hopefully that does make sense, because it's quite an important, I suppose it's quite an important point. Well, it was important enough for us to do a classroom on it just a few days ago. If you recall, we did the volatility calendar spreads, and we said that we were coming into that area where we start expecting the sell, remember, yes? We suggested that we were starting to come into that area where we would expect to see the market selling. Yeah, so you can start to see that this is what we've always anticipated. This is this process that we start anticipating becoming something we have to pay attention to, because otherwise we could end up in the wrong trade at the wrong price. But you can see that we've obviously just pushing this line along to the weekend at the moment. That's when we start seeing the possibility of danger. You can see that this dropping off probably gets us what? A lot of cheap short-term gamma. A lot of cheap short-term gamma gets us a lot of what? Downside volatility, right? A lot of short-term, cheap gamma gets us a lot of downside risk if it starts breaking. It's got to still break, guys. It's got to still find one bad news story or a big wholesale price level that it breaks through to create these conditions. But we had already started we talked about this a few days ago before we had any type of action, any type of price action. But this is why it happens. They're building and building and building those volumes. The line is the Vanna line, John. Well, I'm drawing Vanna rather than anything else, so I'm drawing the gamma position and the Vanna position. The gamma is always a lot flatter because it's just simply it's just how much is in the market. But what the problem is that once the market starts breaking stops, the volatility enhances the gamma, doesn't it? Because if you think about it, if we don't change anything, if we don't change volatility, what happens to delta? Every time price goes up one tick, we get a tick up in whatever delta we've got, right? So it's a kind of uniform line. It doesn't have as much upside, it doesn't have as much downside, but we know that's not true because options aren't just about delta, they're about volatility as well. And we know that as a rule, the volatility component of an option increases as the price starts to break south. The volatility component increases. So as the volatility component increases as the price breaks south, you don't just get the gamma, you don't just get the delta, you actually start seeing that volatility component increasing and accelerating as it starts to drop, and that acceleration gets more drop because this is what we start to see, isn't it? We start to see this process. We start to recognize that type of turn in the markets, and it gets slippier and slippier and slippier as we start to work our way through perhaps a big key stop level or a bad news event, for example. That's what I said in the tweet. We're only one bad news event away from perhaps a bit of a drop, right? We're only one bad news event away from a drop, and that's what we were talking about. Now, the only saving grace we've had today is that the volatility specialists haven't seemed to be too inclined to be madly concerned about it. So if that's the case, I'm not madly concerned about it. I'm quite happy with their view of what's happening. And that's even if we drop through the 4440s, I was expecting a little bit more of a punch, but nope, not really. So I think we've saved it for another 24 hours, guys. I think that's been saved for 24 hours. Now, why and how? Let's take a look at why and how. So let's see what did happen. So we can see that the opening play was bearish. We know that because I shouted I shouted out that I'm short the market at the open here. So we're bearish. Why did we think we were going to be bearish? Because the market opened down from yesterday's close. So if there's going to be anybody, they're going to be selling. Why? Because there's gap down, of course. So there's going to be selling. So we've got to know that this gap down is going to bring selling into it. And obviously, if it sells and doubles back, it's going to be probably an update for the day. So this is already telling us about the short trade. Now, as the price drops down away from this, of course, the next key strike level is 44.40s, right? So we've got that strike level at 44.40s right there. And the price bounces clean off it. Now, at that stage, we don't really have a story. In the background, we can start to see that the volatility guys have actually taken a bit of an interest in this as a dropping market at first. After the bounce and the pullback, one would imagine most people are going to be trying to sell back into this. Simply because there seem to be a few people buying volatility at that stage. And obviously the sell that came back in here, you're starting to think, okay, here we go, and you're expecting a big sell-off at 40. And then we got these volatility divergences. And you think, what the hell? Wasn't expecting that, right? We got these two volatility divergences here and here. So you're thinking that this isn't right. This is not right at all. This is not what I expected. So obviously if you sold into that move lower, you'd have probably been looking at it saying, nope, this doesn't stack up. This should have been a lot lower. It should have been a lot lower. Because obviously the more volatility you get, people start buying volatility. The volatility becomes more expensive as demand for volatility increases. But if the volatility gets cheaper on a downtick, which it did, and not only did the volatility get cheaper, they rotated out of short-term volatilities, which is why the purple line is diverging at the lows, VIX-M, VIX-Y. You've got to be starting to think to yourself, there's no panic here. The panic's over. The initial sell-off panic, which came from the cash open, which could have turned into a bit of a bloodbath at first, panic sell never happened. The panic sell never happened on this second leg lower. So you're looking at that and saying, okay, interesting, didn't expect it, but interesting. And obviously what you're now going to be thinking is, right, there's the low there. So what are you now able to do? Tell me what you're now able to do at that stage. We did it yesterday in classroom for anybody that's interested. What are you now able to do here? Who did it? Who actually did it? What can you now do at this point? And who did it? Does anybody remember yesterday's market when we did this? Does anybody remember that? Anybody? Anybody remember that little phase? We start calculating where the guaranteed discount is. We start calculating where the A point is. We start drawing in our structures, right? Any answer like that would do. Draw in the structures, look for the 3, try and find a measure, mark off 1A. Because if this is 1, then obviously we're already starting to work out some of the processes, and we just keep going with that process. We keep marking off new measures because our initial one is obviously based on this part here. So we would imagine if that's 1, that must be A right there, right? There's the high of A because that's the lowest low at that point with the biggest volumes, the biggest move. So if that's 1, and we start getting a divergence because that's the lowest low of the market at that stage, and this is our 1 point, then obviously if that's our 1 point, this must be our A point at that stage, right? So this must be A. we do what we did in yesterday's classroom. If anybody didn't do it, what were you doing in yesterday's classroom if you didn't remember any of this? So there's the A point just there. So where is my 3 point? My guaranteed 3 point. You should all know about this price, right? Every one of you in this room knew that that's where you would buy, didn't you? Every single person knew that that's where you would be buying. Because that's where your 3 point is, because that's what we taught in the room. This is this process here, where we go from A to 3, and we go from 1 to 3. Is that not what we did, exactly what we did in yesterday's classroom? So we start working down towards the 3. Now, yesterday we never got to the 3 because the buyers crossed in. So we never ever got close to 3, and we got that big rip to the upside. Today we did get down to exactly where 3 is. Today we got the full Monty plus a little bit of change. Why did we get the full Monty? Because of the structure of the Vannas was getting so excessive that we've got to be really cautious just now. So obviously in line with what we did yesterday, this is a mirror image. But on this occasion, we actually ended up right at 3, absolute perfection, because obviously the 2 came in at exactly the right place, didn't it? We didn't get any disappointing setups here. We actually got a full 2 level right there. It's right at the 2 price as well, isn't it? Right there. There's the 2 price right there. And obviously that structure is just so perfect. It's ridiculous. Now, obviously, if we can get a break on this, we now know exactly where the full Monty is on this one. We now know where all the structures are on this one. We can start to work our way through these structural storylines. We can already see exactly where the structure is. Does everybody see where the 50 line is? Exactly where all those buyers came in. Does everybody see that was also the wholesale price? Structure is unbelievable, isn't it? So where do we think the sellers will come in? Here, here, and here. We all have 3 specific clean shot targets available to now go after inside of that basic, typical market structure that we've been teaching for many times. Now, the big question, and it is the big question, is how many people knew about 3 after yesterday's classroom? How many people actually still do this? We teach it to 100 people every day. We talk about it to 100 people every day, and then it trades at 3, and I'm waiting for all this 40 people all saying, I bought the guaranteed discount at 3, or does everybody realize that 3 is at 44.36 on the SPX, or we're coming into that guaranteed discount, guys, just take a watch on it. How many people out the 100? I'm expecting 40, and I don't see any. I don't see anybody saying that that's the price, that's the 3 point. I'm expecting that to be the bottom edge. I don't see it. So the big question is anybody doing it? If you're not, there's your problem, right? There's your problem. You're not using any of the stuff we teach in classroom. Doing what I keep telling my daughter about. Doing the minimum, not beating the excessive amounts that you need to do to be very, very successful. You're doing the minimum to keep your head above water. You'll never be a successful trader doing the minimum, guys. You've got to be the best trader on the planet to beat the big boys. Never mind doing the minimum as a retail trader. And then when you start looking at those ideas, you start recognizing the process and you start repeating the process. You look for the process. Where would that guaranteed discount be? You should know that on every market, everywhere, if you're looking at any chart. You should always know where a guaranteed discount. It doesn't mean you're going to buy it, but it means if you want to buy it, where is it going to be, guys? S&P looking to go ahead and squeeze this level now. Few people lifting the offer quite aggressively, so hopefully that lift will give us a nice breakthrough. This top edge up here at the A point. And here we go. Here's the squeeze. Thank you very much.